You ready? Yeah, you got me running, you got me running, got me running. Shake it, shake it, shake it, baby. Raise your hands up, raise them out.
All right. Hi, everyone, and welcome to the Daily Currency Call with Forex Trading Asia. And thanks to everyone for joining us again as well. And welcome to the new viewers of the show too. And we're so happy that we had a lot of people join us last night on the live trading call as well with Jin. It was really fantastic as well. And thank you for all the participation. So just a quick little intro as well, if you are new to the program. So this is the Daily Currency Call, where we will go through the currencies on Monday to Friday from 11 a.m. GMT plus 8. And the currencies that we do are as follows. On Monday, it is the Aussie and Kiwi. Tuesday, we do the Euro. Wednesday, the Pound. And then on Thursday, we do Yen and Gold. And then on Friday, we do CAD and also cryptocurrencies too. So this is the currency call where you'll get the key support and resistance levels, the market economic updates that really matter for trading opportunities. And we'll also go through what could move prices and really just what to pay attention to as well for both the long-term investors and also for short-term traders as well. So we offer diversified trade opportunities for both styles of trading and also investing. Now, we will go through also what the potential targets are of the trades and also the risks as well. Now, finally, just a quick disclaimer as well, which is quite important to pay attention to this, is that during this session, the trades shared are not intended to be a trade recommendation. It is solely a view and opinion of the individual speaker. So please remember to do your own analysis prior to entering any trades as well. And always feel free to ask questions as well, whether you're in the trading chat room in the LCMS Traders Club and also in this live Zoom call as well. So to start off today, we've got a little bit going on news-wise. So that means Kim Hong will be here just going through the OPEC Plus meeting and what's going on in regards to that. And we'll also be discussing the RBNZ. He'll also be discussing the RBNZ rate decision coming up tomorrow as well. So to start the call off, we've got Kim Hong here now.
All right, thank you, Scott. Okay, OPEC Plus. So pretty much as expected, okay, yesterday they actually decided to proceed on with their plan of a production hike, oil production hike by 400,000 barrels per day, okay, for the month of November. Now, there's actually been like many, a lot of pressures on the OPEC Plus, okay, regarding, wanting the organization to actually increase their production by a larger amount, okay, something above like 400,000 barrels per day, okay. So they actually been receiving pressures from India, from US, the major importers of oil, okay? But in the end, they decided to just stick with 400,000 for now, okay? So if they were to continue at this rate, meaning for the subsequent months, just carry on increasing production by 400,000 barrels per day, okay? By April 2022, is it April? Yeah, April 2022, they will be able to phase out the remaining 5.8, well, not remaining 5.8, the initial 5.8 million barrels per day of production cuts, okay? So because of the whole COVID pandemic, the OPEC Plus actually cut its oil production, okay, by a certain amount, a huge amount, and it has been recovering. So the organization has been restoring this production cut ever since, the economic recovery starts like last year, all right? So at the moment, if I'm not wrong, they are around 2 million, they have another 2 million plus barrels per day of productions cut to be restored, all right? So they continue to face pressures from countries and things like that, and of course the rising oil prices, okay? So I think before the meeting yesterday, okay, there were actually several sources that claimed that the OPEC Plus was actually discussing, all right? So the several nations were actually discussing among themselves on whether to increase production, oil production, by an amount higher than 400,000 barrels. But that wasn't, well, apparently there wasn't any result, right? Because they decided to stick with 400,000. So we'll see how it goes, okay? So the next meeting will be held on 4th of November, all right? So that meeting will actually be, they will actually be deciding on how much the oil production hike will be for the month of December, okay? So as a result of this whole meeting yesterday, all right, oil prices actually rose, leading to the Canadian dollar strengthening. Let me show you the oil prices, all right? So what you're looking at right now is the WTI, all right? WTI prices. So this blue line over here is actually the just $75 per barrel level, okay? And why is this a key level? Okay, because if we were to look at the weekly chart, we can see that previous attempts have been to, for price, okay, for oil, for WTI prices, has been trying to break above, but you know, it didn't manage to happen, all right? So as you can see, this 75 level has been a strong level, all right? And at that time, the market was actually worried that oil prices, you know, WTI, Brent crude prices, may rise to a level that can be, you know, that can be too costly for the global, what do you call it, the global demand, all right, to actually, for everyone to actually purchase oil, okay, for be it for petrol purposes or, you know, cooking purposes and things like that, all right? So it actually have an impact across the board, all right, to all products that, you know, comes from oil, all right? And the last time it actually traded above this 75 level was back in 2024, October 2024. Sorry, October 2014. How can it be 2024, right? Okay, October 2014, right? So that is like
Yim Hong predicting into the future now, 2024.
I'm sorry?
Yim Hong, are you predicting into the future now? So
I'm trying not to.
In 2024 now.
I'm trying not to. But yeah, so the last time it was traded that high was 2014. So in fact, at the moment, it's actually trading at a 7-year high level, all right? 7-year high level. And it has already shoot past 77. Right, so this is the 77 level, okay? Will oil price be going further up? Probably, all right? So I think it was a few months ago that Jin posted this question to me. Will we be seeing oil price hits $100 per barrel? Okay, and at that time, I was like confidently telling him that it's unlikely going to be the case, okay? Because, you know, the OPEC Plus is definitely going to be receiving pressures from all the big nations, you know, like China, US, India, you know, to actually increase their production in order to tame oil prices to a lower level, all right? But at the moment, it seems like the oil prices is actually making good progress, all right? So with this whole expectation, with this whole hope that the OPEC Plus, you know, should be increasing oil production at a higher rate than the current 400,000 barrels per day rate. And, you know, in the end, they are not doing anything to that, all right? This whole result, okay, that comes out from the meeting yesterday definitely pushes the oil prices higher, okay? So with this whole oil prices rising and things like that, it actually translates to a strengthening of the Canadian dollar, okay? So, yeah, yesterday during the ECOFIN chat group, I think Jin was actually hinting at selling of dollar CAD and things like that, right? So I think some of the members actually profited from it, right? So good job. Yeah, personally, I would expect dollar CAD to be, you know, to weaken slightly further, okay, for the time being, at least until the Canadian jobs report that is due to be released this Friday, okay? So yeah, pay attention to the Canadian jobs report this Friday, because who knows? It may change the direction of dollar CAD, all right? And of course, with the US non-farm payroll data as well, okay? So with that, okay, that's all I have to share for OPEC Plus, all right? And yeah, we'll just look forward to the next meeting on 4th of November, and we'll see how it goes, you know, what the OPEC Plus will be deciding for the quota. Okay, so up next, RBNZ.
Here comes the crystal ball from Kim Hong about the RBNZ. Look at that
Yeah.
crystal ball.
Well, I've actually, you know, I answered your $1 million question yesterday, all right? So it's pretty going to be a bit of a repetition from yesterday, okay? But to do things differently, you know, I'm just going to make it clear about, you know, the different scenarios that can happen, okay? So RBNZ, tomorrow, they'll be meeting at 0900 GMT plus 8. Now, the central bank will most likely be increasing interest rate by 0.25%, okay? But we should not be ruling out any other possible scenarios, okay? Now, the first scenario would be the RBNZ increasing interest rates by 0.5%, all right? As previously, you know, discussed by the committee members of the central bank during their previous monetary policy meeting, okay? Now, if the RBNZ were to actually increase interest rate by 0.5%, what does this mean? That will actually be a hawkish hike, okay? A hawkish hike, thus leading to the strengthening of the New Zealand dollar, okay? Now, remember the most recent update that we received from the central bank is that the assistant governor, Hawkesby, actually come out and say that, you know, central banks around the world are actually looking at interest rate hikes at a denomination of 0.25%, okay? That actually causes some weakening in the New Zealand dollar, because it's actually a hint that the central bank is unlikely going to carry out a 0.5%, okay, interest rate hike as per discussed this time around tomorrow, all right? So if the market is actually expecting a 0.25% hike, all right, and the central bank were to come up with a 0.5% hike, now that will be another surprise coming out from the central bank, all right? Surprise after surprise, after another surprise, all right? So, which is why, you know, a 0.5% hike coming from the RBNZ will be a hawkish hike. The New Zealand dollar is likely going to strengthen, and it may even last longer. You know, the strengthening of the New Zealand dollar may actually last longer than just like a few days, all right? So that's the first scenario, hawkish hike, 0.5%, okay? Now, scenario 2, 0.25% hike. This, as discussed yesterday, this will be considered as a dovish hike. So what's the impact going to be on New Zealand dollar, right? Chances are the New Zealand dollar is going to strengthen briefly for a short period of time, okay, before weakening, okay? Why is that the case? I think some of you may have actually heard of this saying before, you know, like what Gene always say, buying the rumor, selling the fact, okay? So rumor is that the RBNZ is going to be hiking interest rate by 0.25%, right? So they buy prior to the release of the news, okay? And okay, of course, maybe like shortly after the news, like a few seconds or a couple of minutes. And then when it becomes a fact that the RBNZ decides to hike interest rate by 0.25%, the market starts selling, all right? So which explains the common phenomena that we always see. You know, why is it that when we have a good non-farm payroll data, USD strengthen for a brief period of time before having a strong retracement, you know? So on like hourly candles, we see like a strong upper wick, strong upper shadow, strong upper tail, you know, whatever you want to call it, candle, right? So that is scenario 2. A 0.25% hike by the RBNZ is considered a dovish hike. Now, scenario 3, no hike, okay? We decide to hold interest rate unchanged at 0.25%, hence no hike. Now, what does this mean? This is pretty much the most straightforward scenario, okay? It's simply dovish. The New Zealand dollar is very, very likely going to weaken as a result, because, you know, with this whole COVID thing going on, yes, but the New Zealand economy has been recovering very well, right? It has been resilient. And at the moment, okay, an interest rate hike is pretty much expected. It's just a matter of by how much will the central bank be rising interest rates, okay? So if the central bank decides to say no hike, I don't know for what reason, all right, then it's going to be a straightforward dovish tone sent out by the central bank, okay? So we are likely going to be seeing the New Zealand dollar weakening, okay? So these are the three scenarios that may happen tomorrow. Of course, there are other possible scenarios with like low probability, like what if it hikes by 1%? I mean, it's very, very, very unlikely, okay? But of course, these scenarios are, since it's unlikely, we are not going to be covering those as well, all right? So earlier on, I mentioned that the New Zealand, COVID situation is still ongoing, and the containment of the virus is still in progress. And I think the rates in terms of, let me just share the COVID cases in New Zealand. Okay, so as we can see, around August 18, that's pretty much the last day or two that the New Zealand sees a 0 case, okay? Before, there's actually a spike in cases all the way up to a high of like some 55 cases, I guess. Yeah, 55 cases on August 28th, okay? That was when the a new case was found and leading to more transmission of the cases of the virus, all right? But ever since then, okay, throughout the whole month of September, virus cases has declined, okay? At the moment, we are seeing something like 33 cases, below 40 cases, okay, per day. So they are actually making progress, all right? But it's still, I would say to them, all right, to Jacinda Ardern specifically, all right, it's still a pressing issue, okay? It's still a pressing issue that, as long as there's cases, we have to contain it, because they are adopting, they adopted a 0 COVID case sort of like a policy, okay? So to them, everything is very strict. So they want it to be as low as possible and, to hold at 0 for as long as possible. So with this whole COVID cases, progress going on, and, it's still ongoing and things like that, the central bank, okay, tomorrow is likely going to highlight the fact that Q3 growth, economic growth in New Zealand is likely going to contract. Okay, so they may be expecting a negative GDP figure, okay, for the third quarter. And because of all these communications, okay, pay attention to the possibility of further rate hikes in the near future, okay? So, prior to this whole new reporting cases and things like that, the central bank is actually expecting to carry out a series, not just once, okay, but a series of rate hikes across several months, probably until early next year, all right, before they get back to their 1% kind of interest rate level, okay? So we should not, okay, apart from paying attention to what is going to be going down tomorrow, we also have to pay attention to what will be coming up, okay, for the next few meetings, all right? So the central bank will be meeting on 24th of November next. So we will have to pay attention to, in terms of communication, in terms of the interest rate statement, whether the central bank, is expecting further rate hikes to continue during the next meeting on the 24th of November, okay? So yeah, two things to pay attention to. First, by how much, okay, by how much did the central bank hike rate by, all right, if they were to hike interest rates, all right? Second thing, will they be considering further rate hikes in the near future, okay? Because they may actually hike interest rate by 0.25%, but if they were to say that interest rate hikes for the next few months is unlikely going to be the case until New Zealand has successfully contained the virus and things like that, that will actually add on to the dovishness coming from the New Zealand, coming from the central bank, okay? So, which is why if you guys are actually planning to trade the monetary policy decision tomorrow, okay, just keep your trade short term, all right? There are a couple of things to pay attention to, glance through the rate statement and see any clues are being given, okay? So if they were to actually raise interest rates by 0.25%, and then they were to say that we are expecting further interest rate hike in our upcoming meetings and things like that, maybe well into early 2022, then that may actually turn things around, right? That may actually add more hawkish tone to what's being delivered tomorrow during the meeting. All right. So if you guys are trading New Zealand dollar tomorrow, okay, just keep your trade short term, and it's probably more of a, I would say, more of a scalping kind of situation rather than we're going to see a lasting effect, lasting strengthening or weakening coming from the New Zealand dollar. All right. So with that, I'll be covering what goes down tomorrow and things like that on Wednesday. Yes, on Wednesday, tomorrow. And just pay attention that the RBA, okay, Reserve Bank of Australia, will be announcing their monetary policy meeting in 7 minutes. Okay, with that, I will hand it back to Scott.
All right, thanks for that, Kim Hong, and thanks for everyone that participated as well in what the RBNZ is going to do as well. Now, also in the chat, I've shared the link for the 1 month free trial, the LCMS Traders Club. So please just feel free to click that and just fill out your email and name, and you can enjoy what it's like to be in the LCMS Traders Club as well, especially if you didn't get a chance to catch the live call as well last night. The recordings are put up only for the members though. So those calls are not shared on the YouTube channel. So that's something, important to note. Now, what I will do here is go through what the US dollar index is doing currently. So I've got the 4-hour time frame up now, thanks to Samtrade. We are seeing, after the pullback where the 93, in fact, 93.70 was broken as well. So the low was 93.65, and we saw this pullback taking place. But, that was really a turning point, and now we are pushing back to 94. There were some opportunities last night that were covered in the LCMS Traders Club as well in regards to the signals, as well as the USD CAD offered a really nice selling opportunity as well. And congrats to anyone that was taking that. We also discussed it in the live trading call as well, with a review of a lot of currency pairs. But in regards to the US dollar now, and the news that took place last night, there was the factory orders did come out a little bit higher than expected. But really the main situation that was taking place was that we did have the Monday equity session overnight, and we did see, especially the tech sector with the NASDAQ, that did pull back quite a bit as well. So we're in a bit of an interesting path now on equities, and we do have that looming situation with the debt ceiling. And we also have something to consider, which is that infrastructure bill that the Democrats and the Republicans are quite far apart on. And, in regards to what that means, it just creates a lot of uncertainty. So with people saying, now is a really nice time to catch that reversal, it looked like that was pretty short-lived. So if you are looking and playing the weakness against the US dollar, you've just got to be cautious as well, such as that, USD CAD trade. Although if we do see oil move a little high, that, could help that trade short. But from a standpoint of the US dollar, once we see trading begin tonight, we'll get a bit more clarity. And if that 94 can be broken. Now, I just want to go through as well the economic calendar. We've got a little bit more happening for this evening in regards to the US economy. So we've got, for Tuesday, it's the 5th of October. This is all GMT +8 time zone as well. We've got some PMI data coming out as well. We've got the ISM non-manufacturing PMI. Should be interesting to see if we can get to that 60 expected. And this is just gives an idea on the situation that is confronting the US, is that rising costs of a lot of, goods, and we've got Christmas coming up. So there's a lot of data that, people are going to be looking at, and it's just how to position yourself in regards to what the Fed are going to be doing. But a lot of this really will be what you could describe as noise until we have that. And we've discussed this already, is the non-farm payrolls on Friday night at 8:30. But for now, with the trades such as if you're looking to hold a position past that 40 pip region, it's just a tough one to say things are going to be moving smoothly because we've got a lot of things going on. And plus you add into the situation with Evergrande, with the defaults, and you've got the US Congress, and there's a lot to pay attention to. But the main stuff has been covered early with Kim Hong as well, with the RBNZ. I mean, that's going to be a nice trading opportunity. And we've also got the Aussie dollar, which is looking like it has started to weaken already. So that's something to look for as well in regards to what was mentioned yesterday. But from the standpoint of the US dollar index on its own, it's a tough one to say this reversal is going to continue in regards to, we're going back down. I would say probably not. It's just, going to hover around until that NFP. And if it is a significant number in regards to exceeding expectations of around 430K, that is going to be just provide some more ammunition for the Federal Reserve to say, okay, now it's appropriate to start tapering. We've seen more and more FOMC members mention that things are, continuing to be more exaggerated with just the rising costs of a lot of things, and it has to be passed on, and it's just a matter of time, really. But for a trading perspective, through 94 is, a long opportunity, but with the indicators looking how they're looking, it's just a matter of time. You really just want to sort of be focused and be a little patient as well, and pay attention to those other pairs that are looking a little bit more opportunistic. And we do have the Tuesday focus, which is the euro. So we've got Jin.
Sorry.
Yes.
I know you're just doing the introduction. Can I just jump in quickly? It is 1 minute to the RBA rate decision. So I'll jump in, and I'll do this a little bit differently for everyone who's joining the call right now. We normally do have our live trading sessions on Wednesday nights. But since we have the news that is just coinciding with our call right now, I'm pretty sure no one's going to complain that I start looking at the news together with you all, give you a bit of a live feedback, give you a bit of a feel of how we do the live trades in the Traders Club, as a bit of insight into what we do, and then after that we'll proceed on to the euro analysis. Is that all good? Give me a big thumbs up if you think that's okay. Okay, good. I can only see the thumbs up from Scott at this point in time, so I'm pretty sure you're happy with that. So the statement has been released here on the Reserve Bank. So they have maintained cash rate at 10 basis point for now, and they are continuing to purchase at a 4 billion rate a week to continue on to February 2022. A bit of a talk of Delta. So what I normally do is I'll skip through all that because that's quite general information. The main thing I'm going to focus on is the package of policies with low rates, bond purchase program, funding. Borrowing rates are kept low, so they're committed to maintain highly supportive monetary policy conditions to bring it to full employment, and will not increase until actual inflation is sustainably within the 2 to 3% target range. That's pretty much as expected, as we spoke about yesterday, and they do not think that this will be met until 2024. So Kim Hong, with his crystal ball, mentioning about 2024 just then, that was a bit of an insight that he has given us already, with conditions requiring labor market to be tight enough to generate wage growth materially higher than its current. So with all that said, it does sound like the RBA has not made any, or it's very clear that RBA has not made any changes to policy. They actually have not made much changes in terms of a forward guidance as well. They have not said too much about what's likely to happen in the near future. The main thing to take away from this is that highly supportive conditions, and they're still looking for full employment with inflation towards hitting and sustaining towards that 2 to 3% target range. So what this has actually applied or resulted in on the charts here, the Aussie US, what I'm doing a bit differently here, this is on the 15-minute time frame. We've seen that with the news being released in this early 2-minute period, it shot down, it came back up, and then now it's still sitting at that 7270 level. I think that the overall view is that because of the non-action, the wait and see, and also the view that they're going to hold the conditions for a longer period of time, all the way possibly to 2024, we are seeing that Aussie weakness being applied, very early stage Aussie weakness being applied at this point. If you are trading, remember the disclaimers to apply. Do your own trade analysis, be responsible for your risk management. We cannot take responsibility for your trades, whether it makes or loses money. But what I would be looking for is selling opportunities below, short-term selling opportunities below 7262, or if you want to be super safe, below 7260, you could be looking for about a 20-something, almost 30 pip move towards the 7233 support level. But it does need to close below that 7260 before I'll be confident for a continual downward move. So this is an example of how, I would, if I'm not on the call, I would be trading this news event. We have our teams watching the news all the time, reading analysis like that, applying it to the charts, identifying trade opportunities. So if you're not able to read the news that quickly, apply it onto the charts. Two things you have to do. First, get onto the Traders Club. It's absolutely free to join. The guys are going to post up the link. And if you don't even want to get onto the Traders Club, then check out Forex Briefcase, where we do it all for you as well. Reading the news, doing the trades, making the possible profit there, all done for you on Forex Briefcase. So with all that said, I'm still watching what's happening here on the Aussie dollar 15-minute time frame. It's not ready to be sold yet, but it is coming towards that point. If I did put in a line, it would be about there, 7260. I'll look for it to break below. You can look for, that 20-something pip, first 20-something pip move downwards, very tight stop loss. And then after that, you can redecide again once it breaks that point to come down, and then whether it's going to continue lower, as we spoke about on Monday morning. Right, so I'll let that run. We might check back on it slightly later when it does break, or if it does break at that point. Coming back to the currency in focus, still have to do the main thing. This is we're looking at the euro dollar and the euro pound. Spoke a lot about it last night with the Traders Club members. The main thing you want to look at is today being Tuesday, looking at the euro dollar. We do have quite a lot of news later today on PMI, Purchasing Managers Index. The main thing you want to look at here is we're not looking at individual countries, but it does give us a bit of an insight of what's likely to happen. And look, services PMI for Spain going from 60 to a 58. Italian PMI, services PMI going from a 58 to a 56.5. French services PMI staying at 56, German PMI staying at 56, the overall services PMI staying at 56.3, but you can see that there has been a slight downturn in some areas already on services PMI. And following on from that, we have seen a little bit of a support on the dollar index. On Wednesday, we do have more Eurozone news, but at this point, not going to do too much for these news. And then on Thursday, more central bankers, members speaking. Pay attention to the news at 19:30 hours, but I don't think this will move prices too much. The main focus is still on Friday, where we are anticipating some rather stronger US dollar data to be released. Non-farm payrolls was 235K, expected at 488, and repeating again, unemployment rate expected to go from a 5.2 to a 5.1. So what all this means, put it together on a euro dollar chart. Coming back to the charts here, before I get to the euro dollar, you can see the Aussie dollar has bounced back up a little bit. So wait for that trade. The euro dollar on the H4 time frame is sitting at that 1.16 level. Trader Scott members, you would have remembered that I was telling you about this 1.16 level. If it does break below, and it looks like it's breaking below, I think that this would be a very good trading opportunity towards the downside. So towards the downside on the 1.16, because we are seeing some US dollar strength come around, and also the PMI numbers probably weakening slightly. So with that, you could be looking for selling opportunities about 1.1587, very tight stop loss of 30 pips. Take profit level, where would you put it? I'll go to the daily time frame, zoom out a little bit, and find you the next point, which could be, I think this is a little bit too far away, but you know, you could have something even right in the middle at about that point there. So the scheme of things, what you're looking for is for it to break below 1.16. For it to break below 1.16, you could be looking at a 30 pip stop loss for a good 90 pip take profit level. As a 1:3 risk reward ratio towards the downside, but you would try and make a decision at a 1:1 risk reward ratio at about 30 pips. If it works, you have a 1:3 from that point onwards. So the safe trade would be a 1:1 risk reward ratio towards the downside. Once it breaches, or if it breaches that point, then you can look at further downside towards the 1:3 risk reward ratio trade. And if the euro dollar does break below 1.16, heading lower, significantly lower, you could see the euro pound here. We spoke about this. This line was drawn yesterday night. We spoke about this testing that 8538 support level. It's still testing the level. I think we will still see it bounce back up a little bit before eventually heading lower to test 8497. So the reason why I think it's going to hit lower and test this point is also because of the pound dollar with possible upside move towards 1.3678. But I will tell you more about the pound dollar tomorrow when we start looking at when the pound dollar is the focal currency pair. So a quick check back on Aussie US on H1 time frame, or well, on the 15-minute time frame, you've seen that it's bounced back up from this 7260 level. This is also one of the things that retail traders really need to pay attention to, is that once the news gets released, your tendency is to get very emotional or try and rush into a trade. And usually if you do rush into a trade, get emotional and rush into a trade, you will normally enter right at the bottom. And then once you enter the trade, it bounces back up and you're in a losing position. So having a clear trigger point or having a clear price level to get into a trade saves you a lot of heartache. Might not be entering a trade, but it saves you a lot of heartache and also potential losses. So be patient. I do think that for the Aussie US on the M15 time frame, we are likely to see it break below this point, heading towards the 7233 support. With that said, Kim Hong, I can see you squinting and your eyes running left and right, reading through the statement already. Do you have any other points that you want to highlight about the RBA statement?
Actually, everything that they have released was actually covered yesterday. Okay, so no surprises coming out from the Reserve Bank of Australia. Okay, personally, I'm still going to expect the Australian dollar to weaken further, all right? Because with the whole ongoing Evergrande saga, the uncertainty and the, iron ore prices and things like that, these factors are actually having a downward pressure on the Australian dollar, all right? So if nothing surprising, nothing optimistic coming out from the Reserve Bank of Australia, then everything will be back to normal, all right? So yeah, that's all I have to share.
So it's back to you, Scott.
All right. Thank you, guys. And that was quite the surprise as well. So again, these are shared on the YouTube channel as well, everyone. So if you didn't quite, get everything that was mentioned, please watch that replay as well. And that was, a nice insight into, how to approach trading around news events, because a lot of, things you see online will discourage you from that. But if you have the right guidance, that's definitely a nice, quick way to sort of make some pips whilst you're waiting for bigger moves to take place as well. Now, also, I have shared the trade idea for the euro against the US dollar as well. And I'll also be sharing some more commentary in the trading chat floor in the LCMS Traders Club. Now, if you've missed what was talked about in regards to the trial. So there is a 1 month free trial. Please click, and I'll share this link again. So just to make sure everyone is aware of it, because this is a great opportunity to participate, get those calls that you don't get obviously for free within the YouTube channel. So right there is it. And again, please feel free to ask any questions, whilst you're watching this, and also whilst you're in the LCMS Traders Club as well. So thanks everyone for joining as well. That's the Tuesday call out. And thank you again for all the new people that joined. And please share it around, guys, on social media. We hope to see 50 plus for Wednesday. How about that?